Okay, yeah, so welcome to this week's edition of um, Winners and Losers in the Stock Market. How come one company would make will make 15% in a week? This company, PBR, is a Brazilian petroleum company, Petroleo Brasileiro SA Petrobras. In 1 week, they made this week that just passed 10.48%. 10.48%. But let's look at these other stocks. HubSpot, ticker symbol HUBS, they lost 10%. Same market. What? This is interesting. So we want to see, what do you look at for so that you can make the 10% gain in a week rather than the 10% loss in a week. So we'll look at just two stocks, one that made this 10% and the other that lost 10%. You see what I mean? Interesting. So starting with the interesting one, what we have here is very simple on the chart. I have a 200-day moving average, the red line on my ticker, where you see my cursor, and then I put just two lines, horizontal lines. The first one is here, and then the second one is here. So you can even bring this here as well. And remember what we said from last week. You put this line, where many price point touches it. So there was a rejection here, price came down here, you can see a cluster of price around here, another test here. So when this broke above at this day, that could have been a day to go long, because the price broke above the resistance area, on this area. If you were a conservative person, you don't want to buy there because there was some overhead supply, what we call overhead supply, there was some price above this, you could have waited here and bought here. You would still make decent money. Let's see this on a daily chart. This is how it looks. You could either have bought here and price never came down, or you bought here, there was a gap up here. Yes, gap up of 5% with heavy volume. So two things: a break above resistance with big volume, and there we go. Also, PBR is an energy stock, and the trending sector right now is energy sector. So it should be buying in a trending sector. It's trending sector. The same thing here. Hopes the same thing, but on the reverse side is what we will see in a losing trade. HubSpot is technology stocks, not in the trending sector. It's technology services stocks, and that is not trending now. These are risk equity, a bit. We call them risk equity. They don't do well in a downturn, and the price is below the 200-day moving average. That is a warning sign. And again, it could use the same area of resistance on a downward side. Look at price try to go above this, but it got rejected, a return. And when it broke above this, I would have gone out. Maybe here also you would have saved some money, but it could have also sold. Even if you bought here at this point, when you return back, you would have sold to save yourself some of the losses. And what again? Two lessons: price below the 200-day moving average, and a break of the support line up to the downside. That was it. So next week, look for stocks in the trending sector. Let's see. Trending sector. Basic materials beginning to trend. So you have here the GDX. GDX is a ETF for gold miners, companies that are involved in gold mining. Price is now above the 200-day. Could this be something that's break above here, and you say I'm going to take a shot around here or here? But remember, we have overhead supply here quite a lot. So if you were to enter, you would be, want to see there's a big break above with big volume, yeah, and that's it. But then overhead supply, your stop loss will be below this to see if there's a big push with big volume. Until next week, I'll see you. Take care.